Welcome back to the deep dive. Today, well, we're diving into something specific, a financial tool lots of folks might consider. The $255 payday loan.
Mm-hmm.
And specifically looking at the no credit check angle from a company called 15M Finance.
Right.
If you've ever been in a spot where you needed cash fast, maybe for the car or a surprise bill, but you were worried about your credit score, well, this one's for you. Okay, let's unpack this.
Yeah, it happens, doesn't it? Life just throws these curveballs, and knowing your options, especially the easily accessible ones, is really key.
Exactly.
So today, our goal is really to sort of pull back the curtain on how something like this actually works, especially when it, skips the usual credit checks. We want to give you a clear picture.
That's the plan.
Yeah.
So our mission, if you will, for this deep dive,
Mm-hmm.
break down what a $255 payday loan is, how 15M Finance handles it, without maybe looking too hard at your credit history.
Mm-hmm.
Who qualifies? And, this is crucial, the pros versus the cons, because there are definitely both.
Oh, absolutely.
And we'll touch on alternatives too, things you really should think about.
Yeah.
We want you to feel informed, ready to decide what's best for your situation without getting bogged down in confusing terms. So let's jump right in.
Let's do it.
So first things first, what is a $255 payday loan fundamentally?
Okay, so at its heart, it's basically a small amount of cash, short term.
Right.
It's meant to, bridge a gap until you get paid next, usually for those unexpected things, emergencies.
Okay.
And the specific thing we're zeroing in on today with 15M Finance is that whole no hard credit check piece.
Yeah, that's the intriguing part.
It means it could be an option, even if your credit history isn't, perfect, or maybe you don't have much history at all yet.
Right, like if you're just starting out.
Exactly. And the amount is fixed, $255. Approval tends to be really fast, sometimes just minutes, and it's short term, usually needs paying back when you get your next paycheck.
That no hard credit check part, that's quite different from, say, going to a bank, isn't it?
Oh, definitely. It's a major difference. When a bank checks your credit, that's a hard pull, and it can actually lower your score a bit temporarily.
Okay.
But here, the focus shifts. Lenders like 15M Finance, they often use other ways to figure out the risk.
Like what kind of ways?
Well, they might look at your bank statements, see if you have regular income coming in, or they'll likely need authorization to take the repayment directly from your account.
Direct debit.
Yep. It opens the door for people who need cash quickly, but, and this is important, it's also why the costs are structured the way they are, to cover that extra risk they're taking from their perspective.
That makes sense. Risk versus cost. So if they're not doing that hard credit pull, how does 15M Finance actually, make it happen? What's the application like if I'm listening and thinking about this?
It's really built for speed and simplicity. Generally, you'll apply online. Pretty straightforward form. You give your basic personal details, employment info, that kind of thing. Income verification, bank account details are key. Then, usually you get a decision almost instantly. So you're not sitting around wondering for hours or days.
Oh, wow. Instant.
Pretty much. And if you're approved, the money can land in your account really fast. Sometimes even the same day, or definitely by the next business day.
Okay. And repayment?
Repayment is tied to your next payday. Generally, that's 2 to 4 weeks away, usually.
That instant decision, the fast cash, that sounds incredibly helpful if you're in a bind.
It can be.
But I gotta ask, with that speed, that ease of access, but what's the flip side? Is there a catch? Are these loans maybe almost set up to be tricky to pay back on time for some people, given how short the turn is?
That's a really critical point. The convenience, the speed, they absolutely come at a price.
Right.
While getting the money is quick and easy, you have to remember these loans carry much higher interest rates than, say, a traditional bank loan.
Significantly higher.
Oh, yeah, significantly. So that convenience costs you real money. You'll end up repaying quite a bit more than the $255 you borrowed. And that ties right into what you said about the short repayment window.
Yeah.
If something goes wrong, if you can't repay it on time, that's where the danger really lies.
How so?
Well, late fees start adding up quickly, and then you might feel like you need another loan just to cover the first one. That's the spiral. People call it the debt cycle.
The debt cycle. Yeah, I've heard that term.
It's a very real risk for anyone who takes one of these out without a solid plan for how they're going to pay it back on schedule.
That high interest, the potential for getting stuck in that cycle. That's definitely the big warning sign, isn't it?
It is.
Which leads us to the next big question. Who actually qualifies? especially if you don't need amazing credit.
Right, and that's kind of the point of this type of product. It's accessibility. You definitely don't need a perfect credit score.
Okay.
What lenders like 15M Finance are generally looking for are a few basic things. One, a steady income source. Could be a job, could be benefits, just regular money coming in.
Makes sense.
Two, you need an active bank account. That's for them to deposit the loan and for the repayment later.
Okay.
And three, you typically need to be a U.S. resident, 18 or older. That's usually it.
So it really is designed around that no credit score, no problem idea.
Pretty much, it opens up emergency funding for people who might just get turned down flat by traditional banks.
That wide qualification definitely makes them accessible.
Yeah.
So, okay, looking at the whole picture, it feels like for some, these are a real lifesaver, maybe. But for others, potentially a really slippery slope.
That's exactly the tension here.
Can we break down the clear pros and cons someone listening really needs to weigh up?
Absolutely. Let's start with the pros. The biggest one, fast cash. Like exceptionally fast for genuine emergencies.
Right, like the car breaking down when you need it for work.
Exactly. Or a sudden medical expense you just can't postpone. That's where the speed helps.
And the no credit check part.
Huge relief for many people. Takes away a major barrier. And the application itself. Super simple, all online. You can do it from your phone. The appeal is undeniable when you're really stuck and other doors seem closed.
Yeah, I can totally see how that immediate access feels powerful when you're, really stressed and up against a deadline. But then the cons. What are the absolute must-know pitfalls?
Okay, the cons are just as important, maybe even more so. We've touched on it. But number one, high fees and interest rates.
Very high.
Very high, meaning you pay back a lot more than $255 over a very short period. And that brings us to con number two, that really short repayment window.
Just those 2 to 4 weeks.
Exactly. Not much time. And if you miss it, con number three kicks in. Late fees stack up fast.
And that leads back to the debt cycle risk.
Precisely. That's when getting caught becomes a real possibility. It's why the advice is always use this only for true unavoidable emergencies, never for just like regular spending or something fun.
Right.
It's built to solve one very specific, very immediate problem. It's definitely not a tool for managing your finances long term.
That's a really critical difference to understand. Okay, so what if someone listening hears about those risks, the high fees, the short turnaround, and thinks, whoa, maybe that's too risky for me right now? It's good to know there are other places to turn, right?
Oh, definitely. There's a whole range of alternatives you should absolutely explore before you commit to a high-interest, short-term loan like this.
What comes to mind?
Well, the simplest, maybe. Borrowing from friends or family, if that's an option for you. Often zero interest, more flexible repayment.
Yeah, if you're lucky enough to have that network.
True. Another option, got stuff lying around you don't use. Selling things online, eBay, Facebook Marketplace, whatever, can generate cash surprisingly quickly sometimes.
Good point. Declutter and get cash.
Exactly. Or if you have a bit of time, even a quick side gig, driving for Uber Eats, doing some online freelance tasks, that can bring in immediate money too.
Okay. Any other financial products?
Well, for people who do have some credit history, even if it's not perfect, check out local credit unions. They sometimes offer small personal loans.
Credit unions.
Yeah, often with much better interest rates and, crucially, longer repayment terms than a payday loan. Gives you more breathing room.
That variety of options really drives home the point that, yeah, payday loans offer that quick fix, but they really are just one tool, and maybe not the first one to reach for.
Exactly.
Which brings us nicely to wrapping this up. We've covered a lot, so what does this all mean for you, our listener, listening right now?
Well, I think the main takeaway is that now you have a really clear understanding of what a $255 payday loan actually is. You get how 15M Finance might offer it with that no credit check feature. And you understand that critical balance, right? The benefit speed, access versus the significant risks costs, repayment pressure, debt cycle.
Got it.
You've got the info to see that, yeah, these could be a potential solution for a really urgent short-term cash crisis, especially if traditional credit isn't available to you. But the big message, the thing we really want to leave you with...
Borrow responsibly.
Borrow responsibly. Absolutely. Know what you're getting into.
Exactly. Before you decide anything, it's not just about if you can get the loan, but when it's genuinely the right move for you.
Right.
Understanding every single detail, especially those high interest rates and that super short repayment time, it's non-negotiable. You have to know that stuff before you sign anything.
Totally agree.
So here's something to think about as we finish up.
Yeah.
Even when you're feeling that pressure, that urgency, just pause for a second. Ask yourself, have I truly explored every other option? Selling something, that side hustle. Could one of those offer a path that's maybe a bit less risky than jumping into a short-term high-interest loan? Because sometimes, the fastest fix isn't actually the best one for your financial health down the road.
Well said. Food for